Good morning, all. Under GST, now we are going to take up the assessment of taxes. And this is one of the very important topics under GST for the second unit. So, the long question and as well as the short questions can be asked from this topic. So, be focused. Now, assessment of tax here means that assessment in simple terms, if we try to define, it is nothing else but determining the tax liability that a particular taxpayer needs to pay under GST. So when we talk about assessment here, assessment here means that the taxpayer is trying to trying to assess the tax that is being paid by the taxpayer on the supplies that he will be making. So under chapter 12, assessment comes under section 59 to 64 of the CGST Act, and all the types of all the different heads of assessment are being provided under these sections. So we'll take up point wise as per the section, starting from section 59, and we'll proceed further with the different types of assessments till section 64. So let us take up the first assessment, that is section 59, self-assessment. Now, as the name suggests, we all know very well that self-assessment is a process whereby a person first assesses the tax payable by him and pays the tax and then files the return, furnishing the details of like how he has arrived at the tax payable by him. So if we say here that as per section 59, every person registered under the act shall himself assess the tax payable by him for a particular tax period, and after such assessment he shall file the return required under section 39. So whatever we have discussed, that the tax liability has to be assessed and accordingly the tax payment has to be done. So when the taxpayer under section 59 self-assessment, it simply says that where the taxpayer is efficient enough to assess his tax liability, then that will come under the self-assessment. So if in that case the taxpayer is assessing his tax liability himself, he don't need any assistance for calculating his tax liability and pays off his tax by the self calculation, then it will come under the self assessment, and that is section 59, and accordingly he pays off the tax and file the return for the same. This is self-assessment. Then coming to the next point, that is section 60 and provisional assessment we are talking about here. See, this is one of the very, very important points under assessment when we talk about the provisional assessment. Now, section 60 says that provisional assessment is what? It is determining the tax liability in case the correct tax liability cannot be determined at the time of supply. So that simply means that whenever there is any supplies made by a taxable person and that taxable person is not in a position to exactly assess the tax liability, then in that case that person has the option for going on for the provisional assessment. Now, provisional assessment here simply means that this is not the final tax, this is not the final like tax assessed by the taxpayer, but depending upon the situation, the taxpayer has tentatively assessed the tax liability, which can be further settled, like in the sense which can be further finally assessed, and later on whatever will be the discrepancy, that will be adjusted. So provisional here means that for now, for making out the tax payment, for now the taxpayer is simply assessing the tax liability as per his known knowledge, which is not the final assessment. And once the final assessment will be done, then accordingly the taxpayer will pay out or will adjust the final tax that needs to be paid out. So provisional assessment here means when you don't know what is the exact tax and you are paying out the taxes under provisional assessment section 60. Now, why this requirement of provisional assessment is there, because when a person, it might be possible that when the taxpayer is not in a position to know that how much is the value of the goods or the services or both that he is supplying to the other person, what is the exact value of that. Other situation, when the taxpayer is not able to know the rate of tax applicable on those goods or the services supplied by him, or if both the situation exist. So in these situations where the taxpayer is not able to know that how much is the value of the goods or the services or both which he is supplying, or he is not able to know that how much is the tax rate which is applicable on such goods or the services that is being supplied by him, in these situation, the taxpayer, the supplier, can go for the provisional assessment. And provisional assessment means he is paying provisionally the taxes for now, but later on the final assessment needs to be done. And when the final assessment has already been done, then he need to adjust the taxes, whatever is the discrepancy in that. If he has paid more, he will be getting the refund of that. If he has paid less, then he needs to pay the extra tax that is being finally assessed. So provisional here simply means that this is not the final assessment, this is not the final calculation of tax, and this is not the final calculation because either the taxpayer is not in a position to assess the value of goods or the services that is being supplied, or he is not able to know the tax rate which is applicable on such goods or the services. So he will be taking the help of the proper officer later on. He will file the return, he will file the application for the same, and accordingly he'll take the help of the proper officer in order to know the final tax that needs to be paid. So I hope provisional assessment, what is the meaning of it, is clear. Then we'll move ahead with the procedure for that needs to be followed for the provisional assessment. Now, the procedure here says that first is the filing of application. So every registered person requesting for the payment of tax on the provisional basis shall furnish an application along with the documents. You can say that whatever is the required documents that you need to show in support of the request. And there is an electronically the form available, we call it as ASMT01. That ASMT01 is available on the common portal, so you can either directly or through a facilitation center you can go for this filing of application, that you don't know the final assessment, you don't know the exact value of the tax liability, therefore you are applying for the provisional assessment. Then second point, it says issue of notice by officer and reply by the applicant. So this point clearly says that the proper officer on receipt of the application issue a notice in the format. Now this is ASMT02 format. ASMT02 format, which is in requiring the registered person to furnish the additional information or the documents in support of his application, and the applicant shall file a reply to the notice. Whatever is the requirement under form number 2, for which he is applying the provisional assessment, for that whatever he wants to reply in regard to the demand that is being raised by the proper officer, he can show it under the form ASMT03 and may appear in person before the said officer if it is required. So he can personally meet the proper officer, or electronically he can provide the documents whichever way is being required by the proper officer. The next step here is issue of order by officer. Issue of order by the officer here means that the proper officer shall issue an order. Now, this is the next form, ASMT 04, allowing the payment of tax on a provisional basis. So for his application, now the proper officer has allowed him to pay the tax on the provisional basis, indicating the value or the rate or both on the basis of which the assessment is to be allowed on the provisional basis. So for provisional basis, whatever how that tax is being assessed, like what the value of the goods that has been taken, or what is the rate that is being taken, on that basis, decided on that basis, the provisional tax liability will be decided, and the amount for which the bond is to be executed. So there is a particular bond that needs to be executed for this liability, and security to be furnished, which is not exceeding 25% of the amount covered under the bond. So for the assessment, you need to proceed with a bond. That is the next point that we will be dealing with, that is execution of bond. So which clearly says that on the provisional assessment basis, there will be an execution of bond, and the security also needs to be submitted, which is not exceeding 25% of the amount that is being covered under the bond. And the proper officer shall pass an order within 90 days from the date of receipt of such request. That is, 90 days is the time limit for such issue of, you can say, order. Then, as we have discussed, that execution of bond is there, and the registered person shall execute a bond in ASMT 05 form, along with the security in the form of a bank guarantee. That can be the bank guarantee for an amount as specified in the order given by the proper officer. So the bond furnished to the proper officer, that shall be deemed to be a bond furnished under the Act, CGST Act, and accordingly the payment, after the final assessment is being done, the payment will be made accordingly. Then comes further calling for information. Calling for information means if any further information is required, then you need to furnish that information under ASMT 06 form, which is in reference to the final assessment of the taxes. Like if any case the proper officer requires any further document for the calculation of the final tax amount, that how much will be the final tax amount, if any further document is required, then the taxpayer is obliged to pay to submit those documents to the proper officer, so that final tax amount can be further finalized. Then comes the final assessment. Final assessment here means when the proper officer issue a final assessment order, like the tax has already been calculated depending upon the value of the supplies. The value of supplies has been calculated, the rate at which it needs to be paid out, the GST rate, that has already been considered, and after that a final amount, that is called as a final assessment. So final assessment has been done, defining the final amount of tax that needs to be paid by the taxpayer, and this is called as a final assessment. And once this final assessment is being done, this is done under the ASMT 07 form. So these all steps has their own form numbers. So when you go on the portal, you will find the form GST ASMT. So all these steps will have ASMT 01, 02, 03. These all are the steps defining the different stages of the form, and accordingly the information will be furnished. Then lastly, it is the release of security. The applicant here may file an application here in Form 8, ASMT 08, for the release of the security furnished after issue of the order of final assessment. So whatever is the security that is being given by the taxpayer, he now needs the refund of that, release of that security, and the proper officers shall release the security after ensuring that the applicant has paid the amount specified in the final assessment within a period of 7 working days from the date of the receipt of the application. So once the proper officer is finally, you can say, satisfied that the amount has already been paid, then he may order to release the security that has been submitted by the taxpayer. So this is the process of, you can say, provisional assessment, where the taxpayer go for filing of application for the provisional assessment. Then after assessing the application, the proper officer issues the notice that he can go for the provisional assessment, but for that he needs to execute a bond and the security. Then after this final permission of provisional assessment, then the process for final assessment goes on. Then if for the final assessment there is any information that needs to be furnished by the taxpayer, then he needs to furnish that information, and accordingly the final assessment will be done. And once the final assessment is being done, then the taxpayer is responsible here to pay out the taxes. And then in the once the taxes has been paid as decided under the final assessment, then the proper officer will release the security that has been submitted by the taxpayer. So this is the procedure for going for the provisional assessment. Then moving ahead with the finalization of provisional assessment. Now see, finalization of provisional assessment here says that defines about the time limit for the provisional assessment once it gets confirmed to the final assessment. So the final assessment order has to be passed by the proper officer within 6 months from the date of communication of the order of provisional assessment. So the date at which the proper officer has communicated that this particular supply can go for the provisional assessment, from that date till 6 months, the final assessment has to be finalized, has to be already calculated by the proper officer and communicated to the taxpayer. Now, this period of 6 months can be further extended on the sufficient cause or the reasons that the taxpayer is showing in writing. So it can be further extended first by joint or the additional commissioner for a further period of not exceeding 6 months. So it can be further extended for 6 months if the joint commissioner or the additional commissioner orders for the same, or by the commissioner for such further period as he may deem fit, not exceeding 4 years. Further beyond this, the commissioner can issue for the extension of this period for 4 years, but for this it needs to be satisfactory for the commissioner, then only he will be extending this period to 4 years. So ultimately, if you can see here, then the tax liability has been extended to the effective period of you can say 5 years. Effective period here in the 5 years means, yeah, so we can see here that from the date the provisional assessment order has been passed until the date of final assessment, it can be extended to the period of 5 years, like 6 months in the first end, then another 6 months for the if the extension is provided by the joint, the additional commissioner, and further it can be extended to 4 years by the commissioner. So maximum it can be extended to 5 years till the point a provisional assessment request has been entertained, has been provided, and the final assessment. So effectively, this can be, the time period can be of 5 years. But in the special cases only, because the commissioner, if allows you for the extension or till 4 years, that will be the special case only. Then finally, if this final assessment has been done, then comes to the tax adjustment. Tax adjustment here means that whatever is the tax liability as per the final assessment, accordingly the adjustment needs to be done. So this, there can be three situations here. First is the same tax liability is being met out, which means that the whatever is the calculation that is being done under the provisional assessment, it is the same in the final assessment also. So where the tax liability as per the final assessment is equal to the liability under the provisional assessment, then the tax is neither payable nor refundable, because that amount has already been paid. Then comes the higher tax liability. Higher tax liability means when the registered person is liable to pay the extra tax, like in provisional assessment, the tax has been calculated is less and the final assessment tax is high. So whatever is the amount of difference in the tax that needs to be paid, and also along with the interest amount that is being paid by the taxpayer to the government. Then if the less tax liability is there, less tax liability means when the taxpayer has paid the higher amount under the provisional assessment and the final tax liability is less, then in that case the taxpayer will be refunded the extra amount, and also he will be paid the interest at the specified rate for the difference in the amount that is being paid by him. So these are the three circumstances that can happen after the final assessment is being done for the provisional assessment. So for the further points, that is for 61, 62, 63, and 64, that we'll take up in the next session. Thank you for now.